I want to continue on the conversation and go into a little bit more detail around the price action that we've seen with Bitcoin. It's not always about the price, but the price is, I guess, a symptom or a sign of what's happening underneath. I don't even know where to start here, Willy, but do you want to just start by maybe a brief history in time since 2017 to today? What's happened since the last time we witnessed Bitcoin have this move like this?
We're in 2021, obviously. It's a very special year because Bitcoin does this 4-year cycle. And we're in that special 4th year of the cycle that everyone gets excited about, which is when price comes out of nowhere and rips upwards in a very fast trajectory when the entire world takes notice. And the last time we had that was 2017, and the year before that was 2013. So it's a little bit like a comet revisiting. And the reason behind that is actually it's designed into the Bitcoin's protocol. Obviously, when you start this network, you've got to give the coins out, right? And so we bring them into existence by mining them. And so like miners will come in and put in a lot of electricity to process the transactions. For that, they get a reward of new coins being mined into existence. So this is kind of the inflation schedule of Bitcoin. And so every 4 years, the rate at which these new coins are brought into existence halve. And so what happens is if you've got half the number of coins being created every 10-minute block, if the rate of coins gets halved, and that happens once every 4 years, what you get is a mismatch between the demand and supply because the supply just got halved. And so that creates a supply shock, and it gives essentially an impulse to the price. And so it takes, about 6 months, usually, roughly 6 months before that reduction in supply makes itself known in the market, and the price starts to climb. And it starts to climb and climb and climb, and then everyone gets feverish and we go through a bull cycle. And so that's where we are in 2021. That's where we went in 2017. And 2013 was the first really public one of that. But it was really for the very technical. In 2017, that caught the public eye for the very first time. It made, CNBC, mainstream news. And I call that the cycle where retail came in and got very excited. Everyone got access to buy. And the cycle we're in now is essentially building on top of that. And now it's the institutional players that are coming in. Like Bitcoin now is reached that line in the sand called $1 trillion market cap. So it's an asset bucket that holds $1 trillion of valuation. And at that point, institutions take notice, because all the major asset classes in the world, they're measured in trillions, not billions, not millions. If you're going to have real estate, that's like a $250 trillion asset bucket. If you're going to have bonds, I think that's in the over 100 trillion. I'm not sure exactly that figure. Stocks are 100 trillion. Fiat money is 100 trillion. Gold is 11 trillion. And now you've got Bitcoin that just sort of birthed into that $1 trillion club. It's de-risked enough and liquid enough and big enough for the institutions now to come in.
You put out a tweet not that long ago where it says, in terms of adoption, Bitcoin is roughly the same users as the internet had in 1997. With this wave that's coming up, the retail people haven't gone away. The institutions are now moving in. These are big wallets that are being unloaded and scooping up these coins, right? So things are about to get interesting, right?
Yeah, I think, like these institutions, what I say is like institutions is another way of saying if institutions are buying, they're essentially coins that are being bought by a custodian that is owned by a whole lot of mums and pops, right? It's public markets. Whether you're a public company or a hedge fund, they have their investors. So essentially, it's just very large concentrations of money held by a lot of people. And so if you were to say Tesla bought $1.5 billion of Bitcoin a few months back, that I don't know how many people own Tesla stock, but that's a lot that now have exposure to Bitcoin. And I think it de-risks the failure points, because the more people that have vested interest in the network and holding Bitcoin, the more that's going to be defended against, attackers like governments and politicians that want to shut it down. Even if I don't think they could shut it down, but it just makes it more difficult for them to provide bearish action to this. And going back to I do want to address the internet adoption kind of analogy, because I did this research near the start of this year, and I brought all the data points from forensically looking on chain, on the blockchain, to see the individuals that are buying in, and also through industry surveys that have been buying in through the exchanges. It's been a very, very consistent doubling over 12 years. Well, the first year just went crazy high, and then after that, it's almost like a Moore's law. Every year, the number of users that are on the network double. And so we're currently at around 2 to 2.5% of the world that have exposure to this asset class. And so that's significant if you think about next year that being 5%, the year after that being 10%, and so forth. So current projection right now is in the next 4 years, 1 billion people will have exposure to this asset. And remember, this trend has been going on for 12 years. So it's not at all outrageous. It's actually a conservative estimate that 1 billion people have access in the next 4 years, and then after that, 2 billion and so forth. So we're very much on the tail end of the adoption, even though we're only 2 to 2.5% in. So yeah, it's interesting. We're 1997, you said? Yeah, that's right, 1997, and it's only a short amount of time between 1997 and say 2005 where it was like everywhere. For the internet.
If that's kind of where we're at in terms of users, like in terms of adoption, but also in terms of what we have discovered it can do for us, then that's just blowing my mind. As users increase, is it reasonable to assume that the price for Bitcoin will increase at a similar sort of rate?
Not as much as it had in the past. As it gets close to saturation, obviously you're not going to get the same kind of gains, but certainly the kind of gains that we can get from Bitcoin now is going to completely crap all over traditional investments. And actually you can, in terms of, it's one thing to have high gains, but the other one is to measure the risk involved in it. Most of the risk in Bitcoin has been removed. If you're a long-term investor, not in the short-term investing or trading, but for the long-term investor, it's very, very much removed. I've got a chart of that.
What you're saying though is that the risk is removed because what? Because the user base is larger and it's more distributed.
Yeah, the user base, the bigger the capital, the more sea of money there's out there. It's harder to move an ocean like quickly. The thing starts to move slowly. It's probably the metaphor to use. So the liquidity increases. So if you want to sell a lot of it, there's probably someone else that's going to take the other side of it, and you can sell into that buyer. So the price doesn't move as much because liquidity base is there. So the volatility starts to drop. And in fact, if you chart that over the long term, we're looking like a dozen years from now, if this continues, which it has for 12 years, A dozen years from now, we'll start to move down into the volatility of, believe it or not, like the US Euro pair at peak volatility. In a dozen years, we'll be in amongst that kind of volatility, which,
Wow.
it sounds pretty outlandish if you're used to the volatility today, but the 12-year history of it is the trend down is very, very consistent. And if you take a look at the risk involved and you calculate that out into a Sharpe ratio is what we use, the risk-adjusted return is the best risk-adjusted return of any asset on the planet. And it's been that since the birth of Bitcoin.
Phenomenal.